Assessors are part of the financial team for their communities. Cooperation and coordination between the various financial officials in local government is essential to the fiscal stability of a community. For municipal government to operate effectively and efficiently, it is important for officials to understand the duties and responsibilities of the other officials they work with, to know how their duties are interrelated, and to respect each other as professionals. The Division of Local Services recommends a financial team approach to sharing information and resources. This approach allows you to develop and implement joint solutions throughout the annual budget process and fiscal cycle. Understanding the duties and responsibilities of the other finance officers encourages ongoing communication with all team members. By reviewing the needs of team members in both individual and common deadlines, issues and concerns can be discussed to allow action to be taken in a timely manner to achieve fiscal stability of the community. A financial team fosters the efficient operation of financial departments as a unit instead of a collection of subunits, sharing information and developing joint solutions throughout the annual budget process and fiscal cycle. Ideally, your community's financial team should include your chief executive officer or a designee and your finance officers. Depending on your form of government, the chief executive officer would be the mayor, manager, administrator, or select board. Your finance officers include the assessors or a designee, collector, treasurer, and accounting officer, and in a town, a representative from the finance or advisory committee. Membership may vary depending on the issue and time of year. Again, the team concept emphasizes the importance of the chief executive in municipal financial departments operating as a unit to coordinate and implement financial plans and activities. Assessors are the chief revenue officers of their city or town. You are responsible for assessing property taxes, which are the major source of revenue most communities have to support their budgets. In addition, you assess several excise taxes that are imposed instead of personal property taxes on motor vehicles, boats, and farm animals and machinery. You also play a key role in the collection of special assessments and betterments assessed for public improvements and some delinquent charges owed the community. We'll now review your basic duties as an assessor. Here we see those duties organized by when they occur during the annual budget cycle, with the first duty of the year being to value property. Here we see the duties organized by whether they relate to the annual assessment of property taxes or the collection of other revenues. Let's take a closer look at the annual assessment of property taxes. First, assessors must value all taxable real and personal property in the community at its fair cash value as of January 1 each year. These valuations are used to distribute or allocate the total taxes the community must assess on taxpayers each year to fund its annual budget. In other words, they establish how much of the community's taxes for the year each taxpayer pays. As you will see later in the Setting the Tax Rate module, the amount the community raises or levies in taxes derives from budget decisions. The value used in Massachusetts to assess taxes is fair cash valuation. Court decisions have defined fair cash valuation as the amount a willing buyer would pay a willing seller for the property in the open market. Assessing all properties at their fair cash valuations meets standards established in the Massachusetts Constitution for proportional tax assessments on property. That is, each taxpayer pays a fair share of property taxes at the same proportion or percentage that the value of his property bears to the total value of the community. Assessors arrive at assessed valuations of properties by analyzing the market and apply mass appraisal methods, which you'll learn about in Module 2 of the course. There are three methods or approaches used by appraisers to estimate market value, and assessors adapt for mass appraisal. They are the market approach, which analyzes what buyers are paying for similar properties in the community. The cost approach, which analyzes what it would cost to reproduce or replace the property. The income approach, which analyzes what the property is worth as an investment. Note The DLS reviews your proposed valuations every 5 years and certifies they reflect current fair cash valuation. Assessors must calculate the annual new growth increase in the community's levy limit under Proposition 2.5 and obtain certification of that amount by DLS. You will learn about how Proposition 2.5 works in greater detail in Module 3 of the course. Proposition 2.5 sets a limit on the community's annual tax levy and allows yearly increases in that limit. One of the annual increases is for what is called the tax base growth or new growth. The increase is based on new value added to your community's tax base since the last tax year due to new construction and some other types of additions. That is information collected and maintained by your office, and you are required to report it to DLS each year. DLS cannot approve your community's tax rate unless you report your community's new growth. Assessors set the tax levy and tax rate for their community and improvement districts located within the community. You oversee the preparation and submission of the tax rate recapitulation, referred to as the recap, to DLS each year. Preparation of the recap requires coordination and cooperation among your office and other officials in order to obtain the information and decisions required to complete the tax rate process. Specifically, the recap displays the community's entire budget plan for the fiscal year. It summarizes the year's anticipated expenditures and revenues and shows the total assessed valuation upon which the tax rate is set. You will learn more about the tax rate process in Module 5 of the course. Generally, however, the recap is a 4-page document with supporting schedules. The recap summarizes all anticipated expenditures that have to be funded for the fiscal year. These include all appropriations made by town meeting or city council since last year's tax rate was set. It can also include other expenditures that must be funded by state law if no appropriation is made. For example, debt payments and amounts allocated to the overlay account to fund expected abatements and exemptions. The recap also summarizes all anticipated and actual sources of revenue other than property taxes that are available to offset these expenditures. These sources include the state aid shown on cherry sheet issued by DLS after the state budget is adopted. The cherry sheet lists how much your community will receive during the year under various programs. Other sources include expected local revenues from motor vehicle and other excises you assess, monies generated by the operation of your community, such as investment income, fees and fines, and reserve funds your community appropriated. The recap then establishes the difference between the total amount to be expended and raised and the total of all non-property tax revenues and available funds. That amount is the property tax levy, the amount that needs to be collected in property taxes to have a balanced budget for the year. The levy is then allocated by the valuations you have determined for the fiscal year. After the tax rate is approved, assessors assess property taxes for the year by committing the annual tax list to the collector with a warrant. You prepare a valuation and commitment list, or the tax roll, each year that lists each taxable parcel of real estate and personal property account. It shows for each parcel and account the owner of the property, the assessed valuation, usage class under property tax classification, and the dollar amount of tax assessed on each taxpayer for the city or town and any improvement districts. You and the other board members must sign the list and state under oath that you have assessed all taxable properties in the community at its fair cash valuation. You then assess a tax on each property owner listed for the fiscal year by giving or committing the list to the collector with a warrant. You determine the tax assessment by multiplying the fair cash valuation of the property by the tax rate applicable to the property class. The commitment fixes the liability or legal duty of taxpayers to pay the tax assessed. The warrant authorizes the collector to collect the taxes owed by each taxpayer in the list. Before making a commitment, you must verify that the collector and treasurer have surety bonds, which protects your city or town against any financial loss arising from failure to perform their duties. You also notify the accounting officer of the amount of the commitment. Your accounting officer maintains records of all financial transactions for your city or town, including the property tax revenues expected for the year. Assessors act on taxpayer applications for abatements and exemptions. After tax bills are mailed, taxpayers may dispute their assessments by applying to the assessors for an abatement to reduce their tax. The most common reason for applying is that the taxpayer claims the property is overvalued, that is, assessed more than its fair cash value. In addition, some property owners are entitled under state law for full or partial exemptions from taxes. These exemptions are for certain types of property, for example, houses of worship, or persons, for example, disabled veterans or seniors. You determine whether a property or person meets the qualifications. The state reimburses communities for a portion of most of the exemptions for individuals. For your city or town to receive the reimbursements, your office must report the exemptions granted with the DLS each year. You must notify the taxpayer of your decision on the application. You must also notify the collector and accounting officer of amounts abated and exempted, as the taxpayer now owes less than the tax assessed and committed. A taxpayer can appeal a denial to the State Appellate Tax Board, or ATB, and you would participate in defending your decision before the board. You will learn more about the standards and procedures for abatements and exemptions in greater detail in Modules 6 and 7 of this course. Assessors manage the overlay reserve. Each city or town has an overlay reserve account to fund abatements and exemptions. The overlay is a single account and is used to fund abatements and exemptions of assessed and committed taxes for any fiscal year. It is also used to abate or write off uncollectible taxes. Interest owed to taxpayers on abatement refunds of paid taxes are also payable from this account. As part of the tax rate process, DLS reviews the balance in your overlay to ensure it is sufficient to fund expected abatements and exemptions. Monies to add to the overlay account may be raised when setting the tax rate. An appropriation is not required. From time to time, you may determine that the balance exceeds potential liability for abatements in amounts that may be uncollectible. If you determine there is a surplus, you notify the accounting officer. The accounting officer then transfers that amount to an overlay surplus fund. The monies in the overlay surplus fund can be appropriated for any purpose during the rest of the fiscal year. Note that if the chief executive officer asks you to declare a surplus, you must respond within 10 days. However, you still determine whether there is a surplus, and if so, to transfer it. Please click the button to review our informational guideline release about overlay and overlay surplus, including standards for determining a surplus. Now that we've covered your duties related to property taxes, let's review your duties related to other taxes and collectibles. Assessors commit original and apportioned betterments and special assessments. Betterments and special assessments are special property taxes assessed on real property to pay for the construction of public improvements, like water and sewer systems. You play a key role in collection of betterments and special assessments made by your city or town. They are often referred to as fees, but they are locally assessed taxes. The cost of the public improvement is allocated using different methods to abutting properties that are benefited by the construction. Unlike annual property taxes, however, the Select Board, Water or Sewer Commissioners, or other board or officer is in charge of making the public improvement and assessing the cost of the project, not the assessors. The board or officer determines the assessment for each property and certifies those amounts to the assessors. There is a lien on the real estate to secure payment of the betterment or special assessment. So those assessments are made on the same parcels you use to assess regular property taxes. The board or officer that assessed the particular betterment or special assessment also administers the abatement process. Taxpayers apply to that board or officer if they want to dispute their assessment. You will be notified if an abatement is granted. After you receive the certified assessments, you commit the betterments or special assessments to the collector with a warrant. Like regular property taxes, the commitment fixes the amount owed by the taxpayer and the warrant authorizes the collector to collect the assessments. The collector then sends out bills. Betterments or special assessments may be a significant amount given the types of improvements for which they are assessed. Therefore, a property owner can pay in full or decide to pay in yearly installments for up to 20 years. Typically, owners are provided with a form to advise your office how many installments they choose and are told the number of years that will be used if they do not respond. The division of the assessment into annual installments is known as apportioning the betterment. Before the next property tax commitment is made, your office will receive a certification from the collector of all assessments not fully paid. You then add 1 year's apportionment with interest to the unpaid balance to the property tax assessed and committed for the property. The interest rate you use is provided by the officer or board that made the assessment. You repeat each year until all of the apportionments have been added to a tax or the assessment has been paid in full. Assessors commit delinquent municipal charges that are liens on real property. Cities and towns charge property owners for various services they receive, such as water and sewer. If the charges are not paid, a lien exists on the property to secure payment. You play an important role in initiating that collection process by adding the unpaid charges to the annual property tax commitment. The most common charges for which a city or town holds liens are water and sewer user charges, municipal light charges, trash fees, and charges for demolition of unsafe structures. The department that bills the charges, or the collector, certifies the overdue charges that are liens to you each year before the tax commitment is prepared. You then add the amounts to the tax assessed on the particular property. If the property owner does not pay the additional amounts, the collector can then perfect the lien by placing the property in tax title. At some point, if the owner continues not to pay, the treasurer can go into land court and foreclose the tax title. The city or town can then sell the property to liquidate the debt. As with betterments, the board or officer that assessed the particular charges or fee administers abatements. Assessors administer local excise taxes assessed instead of personal property taxes on motor vehicles, boats, and farm animals and machinery. Typically, of these three excises, the motor vehicle excise produces the most revenue for a city or town. You will learn more about the motor vehicle excise in Module 9 of the course. As with assessing property taxes, administration of locally assessed excises requires you to prepare a tax list, commit the list to the collector with a warrant to initiate the billing process, grant abatements and exemptions as appropriate. Assessors play a critical role in the community's budget process and financial management. The budget is the annual financial plan of a city or town. It is the product of a process by which your city or town determines the revenues and other financial resources it expects to have during the fiscal year and defines service priorities and goals within those resources. Adopting and implementing the annual budget is fundamental to the ability of local government to perform its vital functions, such as education and public safety. The level at which those essential services are delivered derives from the priorities and goals set forth in the budget. The budget process is continuous and overlaps with the next cycle, from monitoring and implementing the current budget to using that information to plan for the next year's budget. Teamwork among community executives, budget and finance officials, and department heads in sharing information is essential to making informed and timely decisions. Assessors play a key role in developing the annual budget. The budget process begins with the development of an estimate of the revenues your city or town can anticipate collecting during the fiscal year. This establishes the amount of money it will have to fund expenditures. For most cities and towns, the property tax levy is the largest source of revenue available to fund the budget. The actual growth increase in the levy limit is determined and approved before the tax rate is set. However, you will need to provide an estimate of the increase for budget purposes and ensure that budget officials understand the basis for your estimate. You also provide expenditure information. As a department head, you provide a budget request for personnel, contractual services, and expenses. You also provide the amount needed to ensure the overlay is adequate. In doing so, you would look at a number of factors such as the past history of abatements granted. Also, if a deficit occurred in the overlay that needs to be funded out of next year's revenues, the assessors or accounting officer provide those estimates. Setting the tax rate and mailing tax bills in a timely manner are keys to successful financial operations. To carry out your community's approved budget plan for the year, monies are needed to make payroll and pay bills. If tax bills are delayed, the treasurer may have to borrow in anticipation of revenue for cash flow purposes, which is an added and unplanned expense. Late tax billing also results in loss of investment income on property tax collections and disrupts regularly performed financial activities, particularly for the community's financial team. That often creates delays in the next fiscal year's schedule of activities. Your primary responsibilities are to complete all valuations and your 5-year certification review and interim year valuations so that property tax bills are issued on schedule. If budget decisions remain, your office should be ready to coordinate the setting of the tax rate with other officials as soon as those decisions are finalized. As you will learn in Module 5, setting the rate requires you to gather information from the accounting officer, clerk, and treasurer. In addition, your select board or city council and mayor must make certain tax policy decisions under the property tax classification law before the rate can be submitted for approval. Early in the year, the financial team should develop a realistic timetable for all actions needed to get bills out that year in a timely fashion. If your city or town is completing a revaluation and undergoing certification of its assessments, installing new computer systems, or using new vendors, you should build an adequate time in the plan to respond to implementation issues. The team should review the status periodically and more frequently as you approach the target date for issuing the bills. The Division of Local Services recommends target dates for preliminary certification of values and submission of recap for both semi-annual and quarterly tax billing communities. You may use that as a guide in developing your timetable. Let's review the key concepts discussed in this lesson about the assessor's role as a municipal finance officer. First, assessors are part of the financial team for their communities and must coordinate their activities with other officials to ensure sound financial management. Second, assessors function as the chief revenue officers of their communities by assessing property taxes and local excises and initiating collection of betterments and municipal charges. And third, assessors and the Division of Local Services with the Department of Revenue have specific statutory duties regarding assessment administration.